All right, welcome back, and joining us for a look at the equity scene is Jacobus Brink from SFO Investments. Thank you so much for your time, Jacobus. Pretty interesting moves that we are seeing there in the market. Quite a downbeat day. We have seen the JSE also making a turnaround from green to red territory today. Would I be right in saying that the downbeat mood is holding on to the US producer inflation that came out this afternoon, surprising to the upside, but also what is so different about this print? Because we also did have markets shrugging off the slightly higher than expected CPI on Tuesday.
Yeah, Zanati, thanks so much for having me. It's always a pleasure. It's just, I suppose, a good thing to see that we're not starting off the day with some bad news out of China. So I suppose that's always a good start, but it's never a great one when it gets followed up by some bad inflation numbers. I think it's been a common theme since the start of the year in my mind that the market has been very, very bullish on that. Inflation is going to come down, it's going to stay down, the Fed can start cutting rates, and I think we've continually seen the upside. You say surprises. I'm not sure if it's still a surprise anymore, because this is probably the fourth inflation print in a row that we've seen coming out hot. Market pretty much shrugging off, as you mentioned, the consumer price inflation we saw on Tuesday. But I think this one does tend to weigh on the market a little bit more, purely because of the fact that producer price inflation typically tends to lead CPI. So the fact that we are actually seeing PPI picking up is worrying, and the market's clearly a little bit concerned about that. I think the other thing to maybe just keep in mind is that all of these numbers are coming off very low bases from last year. So we are seeing that base effect coming into play here, and that could also be worrying for the Fed going forward.
Yeah, and actually, is it also nervousness on the fact that this is like maybe the last piece of economic data that we are getting before the Fed's March meeting? So, and maybe we can expect going forward, until that meeting, for markets to get jittery quite a lot.
Yeah, no, definitely. No, I think if you just look at what markets are pricing now, it's pretty much now completely pricing out the Fed, a cut next week by the Fed. So that certainty, I suppose, is weighing on markets. So it's going to be an interesting one. I think the other thing that's also putting markets a little bit on the back foot today is the oil move. Despite the fact that we saw the dollar rally quite hard after that PPI print, all of the commodities pretty much are all down, but oil's the odd one out here. It's up almost 2% after the report that we saw from the International Energy Agency that it expects oil demand to actually pick up here. So oil was the one, if you just look a little bit through in the detail in the inflation prints that we've seen over the past number of months, energy was the one that was sort of keeping it down. A lot of the other numbers, shelter, all of those, food inflation, fairly sort of tame, but energy was the one that was keeping everything down. And now we could see a situation where energy is starting to pick up again, and that's obviously going to be very negative for the inflation numbers going forward. And I think the other thing, it's a little bit more technical, I suppose, but futures traders are currently positioned very short on energy. So the minute we start see energy spiking again, and they start to cover those shorts, we could actually sort of get into a scenario where we see a short squeeze, and that could actually be, see a very volatile move to the upside. So that's just something, to keep in mind as well.
Yeah, well, thank you for that. And I mean, really, it could be a bumpy ride going forward. Let's take a look at some of the company news that came out of the JSE. Standard Bank coming out with its year-end results. Also having a bumpy ride, that stock was down more than 6%. It did report good headline earnings per share, return on equity, growth in the dividend as well. And I'm wondering if, that upwards move in the credit loss ratio would have justified the kind of move that we are seeing on the share price today or not.
Yeah, no, very, very interesting one indeed, and got hammered quite hard. I mean, as you mentioned, the profit growth looked decent, up 27%. High interest rates obviously helping them, but clearly, that's being offset by the rising bad loans. Our I think all four of the big banks in South Africa have been very conservative on their provisions, for bad loans, etc. But I think, this caught the market a little bit off guard, I think. As you said, we are pushing that upper limit as far as that is concerned. So I think, that is the thing. But I think, it's a reflection of what's going on in the South African economy at the moment. We've got very high interest rates. We've got a consumer that's really battling under pressure, and it's starting to show. So a little bit worrying. Markets reacted a little bit bad, I suppose, on that news, but it was obviously complicated a little bit as well with the PPI numbers we saw. So those were obviously not in favor of keeping yields down on the day. So it's sort of a double whammy that they got there, especially today. And I think that's probably why we saw this overreaction in the price move on the downside.
Jacobus, we have 1 minute for two questions. Let's quickly go on to Exxaro, another counter that has been a victim of the bad macroeconomic environment, Transnet challenges. We did see those financial metrics on the downward trend. And I'm wondering what you made of that performance.
Yeah, I suppose not entirely unexpected, given what coal prices have been doing. I think the one thing that sort of did save them a little bit was the rand weakness that we saw. But, good to see that they're still trying to sort of keep the dividend up there. I think it signals a lot from management, which is always a good thing. And what's also a little bit of a positive we could take out of there was their wind power business. That contributed, I think, about 18%. There was about 18% increase in that. So, some positive to take out of there, but not entirely unexpected.
All right. Well, let's get to your stock pick for today. Jacobus, what will it be?
So my stock pick for today is Anheuser-Busch, going a little bit defensive. I think, as you can see by a number of these results that we spoke about today, and some of the recent consumer or retail sales print and everything we've seen, the consumer is clearly under pressure. I like the fact that this is a bit of a more of a defensive play, and we're still expecting sort of double-digit growth in earnings going forward. So my stock pick today is Anheuser-Busch.
Right. Thank you so much for your time and for giving us insights on what has moved investors' money today. That was Jacobus Brink from SFO Investments.